All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. The path for you to be good at this is there, but that's only if you're willing to put in the work to create a system that can be back tested and repeated. Look at this, it's so perfect. You literally cannot make it up. Look how precise this is. Once you see it, you can't unsee it. Wow, would you look at that? Ain't that something? Any time frame, any ticker, it does not matter. The market is just one big, beautiful Mando model. That's all. All right, what's going on, everybody? Welcome back. I feel like I haven't done this in forever, but we are back live streaming here. We're across all three platforms, X, Rumble, and YouTube. If you want to go over and follow, subscribe, like, do whatever you got to do on all of those, would appreciate it greatly. We've got a very important call tonight because while, yes, it is titled a weekly prep, it kind of goes beyond just the weekly. So we're going to dive into the higher time frame analysis because it was pretty 50-50. I had one of those tweets catch some, serious visibility there. And half of you loved me, half of you hated me. And I don't know how many understand me. So I will at least just break that down and, kind of give you an idea as to, I could type it as much as I want. I think it sounds a lot better when it's through voice and you can kind of see the process that I'm going through mentally as well, because where I think, currently where we stand across all indices right now, I don't think this is necessarily a layup, right? So for example, pretty much all last week minus Monday, I was pretty much on the right side of the track. And, it's very easy when you have a good idea on what the draw on liquidity is, where price is likely to go. And, sometimes you're just not going to have that. And right now, still from this higher time frame perspective, I mean, I'm going to give you the justification for both sides. But what's more important is I'm going to just explain my thought process on how I'm going to really maneuver inside of this specific monthly imbalance that we did, in fact, form last month. So that's going to be the real focal point tonight. We will go down and break it down into the much smaller timeframes. If we got time at the end, we'll go through some individual names. But one thing about the individual names that I'm finding myself being just, I'm not banging the table on anything. And the reason really for that is because that higher time frame draw on liquidity, to me, it's not as clear. And when that doesn't happen, sure, you can justify higher moves, but at what cost? Are these going to be those moves that get that continuation type of bump, or is it not? So I think after I explained just my overall ideas from the general index perspective, I think it'll make a lot more sense as to why I've really been trading SPY specifically. And, if you were to go back, 5 months from ago, I was basically just trading individual names. So it kind of goes in waves on how I kind of operate, just due to the fact, do I have a clear higher time frame draw on liquidity? If so, fantastic. If not, I got to dive in and try and look towards smaller time frames just for, I'm not looking for the big home run here, because if you have been playing for that big home run, you have not hit it. Okay. So let me share my screen and I'll break this down. And, as always, if anybody has any questions on anything that we kind of touch on here, feel free to just drop a comment, and we will, dive a little bit deeper into that. So just from that tweet again, because like I said, half the people loved it, half the people I was getting attacked, by people who don't even follow me. So, ironic, but let's just go through that tweet. I said, it is official. The first bearish monthly imbalance has formed since January of 2022. Okay. Guess what? That's just the truth. That's just a fact. Sorry for talking facts, man. And again, everything that I say, everything that you see anybody on Twitter say, my biggest thing is always go back and back test it, because if it doesn't make sense to you, it shouldn't be something that you're viewing as a, godsend moment, right? Because I hope you guys have seen my work from a larger scale, and you see how long I've been doing this for. But most of the people on here don't really know what they're talking about. They would never come on here and do some sort of stream with me, or just in general. And if they do, they're probably stuttering over their words every 2 seconds and just talking about, rising wedges and all this nonsense. Okay. But like I said, the first bearish imbalance has formed since 2022 from a monthly perspective. That is a fact. Okay. So let me just remove this and I'll show you guys again. And what is an imbalance? Because this is a question I had gotten asked many times by people who might not be familiar with that. And that's okay. The idea behind a bearish imbalance, okay? Any time frame, it's not going to matter. The overall concept is really the takeaway here. Now, if you were to look at this specific candle here, without any wicks on either side in this specific region of your chart, what is that telling you? Okay, the tell here is that there was no ability for price inside of this candle or this candle to contest inside of this specific range. Okay, so when price doesn't, even make an attempt, or it doesn't have the juice to even get into a specific range, we would consider that an imbalance in price. Okay. And in this given circumstance here, this would be a sell side imbalance and an inefficiency of buyers inside of this specific region. Okay. The expectation from, a wider lens, and I'm going to explain this to you from both point of views, because I think I can kind of build a case pretty well in either direction. And that's why I think when I get beyond that and kind of explain both sides and get down into how am I going to operate inside of this specific region, I think that'll be much more enlightening. But if we are imbalanced in a specific region of the chart, our expectation is ultimately price gets up into that imbalance and starts to go and head down for discount of its given range. Okay. That would really be issue number one as to why I don't believe this is as clear as we might think. The reason I say that is because if you were just to look from a NASDAQ perspective, you might say, okay, well, if we were to zoom this all the way out and look from our, the entirety of the range, from the lows set all the way back in October of 2022 up to our highs that were established in December of 2024, this looks pretty good. It looks like we got that discount, right? Unfortunately, not. Okay, so check that low. That low of that candle is at 460. Okay, 50% of this range is at 16,455. So you might say, okay, we didn't get down into discount. So our expectation ultimately is that we get into discount, kind of like what happened here in 2022 with that bear market, right? Price got into its bearish imbalance right here. I will zoom in just for some more clarity. See it? Very slight, but you see that wick just tap and boom. And that's ultimately the expectation in a perfect world. But I'm going to explain to you why this is not a perfect world. Just another example. We'll go all the way back. We can use COVID as an example as well. COVID's was so swift, right? That was the kind of what I was hoping for in this run here, where it was just a gap down. That's a bearish imbalance. Here's your discount. Here's your imbalance. There's your run for highs to complete the Mando model. Now, the similar situation would occur. We can go back to 2000. Okay, this is the .com bubble, right? First imbalance formed from a monthly perspective. Price gets sticky. Consolidation, 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 consolidation. Does not take out the open of that wick, right? That would be the nullification of an imbalance, if you will. And ultimately, price gets in and price gets out, right? Now we'll follow that up with 2008, okay? Very similarly, first imbalance to the downside. Here's your retracement back into it. Again, no, does not take out the high of the candle that created the imbalance. That does not nullify this imbalance whatsoever. And there's ultimately your next flush, okay? So it's very easy, I think, to just say, oh, well, we made that first imbalance, we're going down, right? And I would say, do I lean that way? Yes, kind of. But here's just the reason why this to me throws a huge wrench into the whole operation here, because we're getting a little narrow-sighted. We are looking at one index right now. We're looking at NASDAQ. Now check this out from a S&P perspective. So all you SPY people, right? Look where we are in terms of SPY, okay? You might say, oh, wow, we didn't even get in that imbalance yet. I would say you are right, okay? Do we see a wick on this to get into here? Do we see the wick on NASDAQ, which actually gets through that imbalance prior to some rollover? That is also a possibility. But the big takeaway I have here on the S&P versus what I see on NASDAQ is, come on over, check your quarterly range. From your lows up to your high, you actually did get a discount and you did get into a bullish imbalance from the S&P perspective, okay? So if you were to show me this chart without showing me NASDAQ, I would tell you I think this is going up through those highs. I think this monthly imbalance could be a speed bump, but ultimately I think it's going highs. So right now we have divergence between NASDAQ and we have it on the S&P. That is not fun, okay? That just makes things much more difficult. Now you want to make it even more difficult? Got you. Come on over to the Dow, right? YM is its future ticker. Look at the quarterly range from your low up to your high. Did you get into discount? Yes. Did you get into a bullish imbalance? Yes. That sucks. Very unfortunate. Okay. So now we have 2-1. We have Dow and ES, which actually got into that discounted imbalance while NASDAQ did not. Okay. To me, this level of divergence, this level of uncertainty, in a perfect world, they're all going to be moving in, a similar direction, kind of at the same pace as well. So with all of that, how am I going to operate? How am I going to kind of, skin this cat? So to me, using this higher time frame analysis, right, where a lot of uncertainty, could we justify a move down into discount? I think we could. Totally. Monthly imbalance. Every time a monthly imbalance has occurred, prices gotten into it and ultimately retraced lower. But the only time that we had gotten into discount prior to getting into that monthly imbalance was COVID. And we all know what happened during COVID. Swift move up and through. Okay. So discounting really being the key here. And the fact that NASDAQ did not get it, that just makes me really, really annoyed. Okay. So with all of that being said, I'm going to have to dive into smaller time frames to see if I can get a little bit of an edge for myself. Okay. So as we go down into our weekly, you will notice that we have a bearish price run on the weekly here from your highs back in February down to your lows in April. Okay. Price ultimately has gravitated back up towards 50% or discount of this bearish price run. Okay. So at this point, again, in a perfect world, if you're looking to play a Mando model, right, you're looking for that discount retracement into a bearish imbalance where ultimately price will reject and run down through lows. Okay. Again, we had noted that from our higher time frame analysis, I don't think this is a perfect world. Okay. So while I think this area, there is a lot to it, that monthly imbalance, are you going to see me bragging if it goes down in the direction that I'm kind of anticipating? No, because I don't know how I'm going to really trade this until there's one area on this chart that's really looks pretty appealing to me. Now, I don't necessarily think this is going to be the first move, right? Is there a chance we actually just completely erase the ability to form a weekly bullish imbalance here? That's a possibility, right? When we get to the smaller time frames, we will dive deeper into that. But there's one level right here that kind of is making me think, we could see this, and then we kind of have things lining up between NASDAQ, SPY, and Dow. Okay, and here's what it is. See this 20,536? This is buy-side liquidity that also coincides with a bearish imbalance, okay? And this is in discount of its weekly run, yada, 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 okay? If we were to eventually get that run up to 536, is that enough for SPY and Dow, to get into their respective monthly imbalances? Maybe. That's a possibility, right, from that point. But really, until that point, I'm not going to feel totally comfortable looking for prolonged downside. Look, if we can negate a weekly fair value gap from forming, that's a completely different story. But out of those monthly imbalances, I think the key really comes down from a daily perspective. And this goes for, what I was saying when we were dumping the way that we were over the last, in the beginning of April and all of that. But there's one thing that always sticks out to me, and this is to me what makes something tradable or makes something not tradable. Until you form an imbalance, okay? For example, from a bullish perspective, right? You're looking to quote unquote catch bottom. Until that imbalance occurs, I'm not really looking, I'm not really trying to call the bottom. That imbalance itself will not only, kind of give me the idea that, okay, it's time for us to bounce, but it'll also give me an opportunity to trade off of it because it is very structured. You can use these imbalances as entry somewhere in the imbalance, stop loss at the low of the candle that created it, looking for buy side liquidity. And you could always have a well-defined trade well in advance. So that's exactly how I'm going to operate inside of all of these monthly imbalances. Because again, I think you could justify a bearish thesis. I think you can justify the bullish thesis. I'm here pointing out a fact, right? And I had, again, half the people who were, yeah, he's bearish, woohoo, when I'm not. And then the other half is like, oh, he's an idiot bear. He's going to get murdered. Just go back to last week. Just see the receipts, okay? You picked the wrong week to attack me when I actually post my wins, okay? Because I don't do that very often. But you picked a terrible week, and especially because all of those trades I took last week were bullish. They were to the upside, okay? So, but really the big takeaway, and this is kind of how I'm going to operate inside of it, is specifically when we are inside of this monthly imbalance, which we are on NASDAQ. If we were to get some sort of downside bearish imbalance, that's my go. That's what I'm going to use as the structural guide for that trade, okay? Because think about it. If I wanted to just trade solely off of the monthly imbalance, just think about how silly this is, okay? In reality, because you've seen, you all saw it, I put it up before, but you saw how you can get little wicks above it, right? Historically, it has. This one, not really the best example because we got in and literally immediately got out. But if we were to go back here in 2008, look, we wicked above it. We were above that imbalance. We didn't, negate it by any means. We did not balance that price range, but you got a little wick higher, right? Same thing here, right? You got into it, bodies respected perfectly, but guess what? You did not take out the high of the candle that created it. There was no, there's no verification that imbalance is now balanced. So if we fly over here, it's going to be the same idea. And if I'm looking at this from a monthly perspective, looking to actually operate off of this imbalance, you're looking at a potential, 2000, say, let's just say 20,100 as an entry point. Your stop loss isn't going to be for over 1,000 points. Does that set you up for good trading? Not so much. No. So my idea here is basically how it really always kind of transpires. I know this is on a larger scale and this is from a wider time frame and time horizon and everything like that, but until a daily imbalance forms to the downside, I'm not necessarily going to be, oh, we are going down, down, down. And I promise you, if you follow me, you will not see me. Maybe the area in which it rejected from, but you are not going to hear me, ride home like I did on something like this where I would tweet it 7 million times. Hold on. Where's that? Here. Like this, when that low is called, like you're not going to see me do something like this. And the reason you're not going to see me do something like this is because I don't think this is the easiest trade of all time or anything like that. I also don't want to be, middleman and brag about something that I didn't even really operate off of. Now, when that first imbalance forms and I use that as the kind of, compass for my idea, that's a completely different story. But just from that monthly imbalance perspective, I think it's tough. History's told us we've always rejected it. Our quarterlies have something different in mind here. And that's the only thing. The only time we've ever seen a sharp move like this is COVID. And we all know how COVID went. So from a wider lens, from a, larger scale, I've been saying the word pivot. I'm using it as a pivot because to me, this area is going to give us all the answers that we need moving forward. But for me, risking 1,000 points on a NASDAQ, it doesn't seem so logical. I think I could definitely crunch this down into a little bit of a smaller time frame and operate off of that versus using the entirety of that imbalance. So again, that's kind of where I'm at right now. I don't know if anybody's, viewpoint is a little different than mine, but that's kind of, I would love to be the guy to say this is the top, we're going to dump. I think I just need to be fair in this situation because there is a lot of divergence across the board with Nasdaq and the S&P and again, with divergence, I don't think you get layups. And when you don't get layups, I think tweets like these are, silly because it's like, okay, yeah, I could tweet it. I could put it on here, sure, and kind of just hope it works. Or I could just wait for that daily imbalance to kind of give me the directional bias moving forward. That's kind of the way that I lean moving forward. So let me just check in on the chat, see if anybody else had questions or anything like that. I also think, just for example, you get people who, call the top, call the top, call the top, call the top, or call bottom, however you want to slice it. And it's like, if there's no like true like method to getting to that specific point or getting to that idea or thesis, I think it's just it's kind of silly. I don't think it's really a good thing to do. So, yes, this job would definitely be hard blind. When your stops hit you, you just get the MK voice fatality. Let's just see the rest. You lower in equities, gotcha. So it's you're looking at more small cap summer. We can look at the Russell in a little bit here. You probably will notice, and this tends to happen often. Actually, it happened towards the end of last year as well. But sometimes you get a lot of these, random, mid cap names, not really, too much of a weighting in say Nasdaq, SPY, or any of that, and those tend to look pretty good, right? And even in a market downturn, names like that do fine. So there is potential for that. Now, in terms of like large caps, we'll go through some large caps that I wanted to take a look at, specifically names that are kind of heavily weighted inside of Nasdaq SPY. So oh, you got froze up. Oof. Equities bear market, Bitcoin goes to 1 million. We could talk about Bitcoin too. Sure. Yeah, like on the stream would be cool. Thank you, of course, always for the support. NQ has a nice weekly breaker corresponding with the 2053 for a big sweep. Yep. So that would be a closure above that 2536, right? And we'll get the imbalance right around the same time as war tariff news. Yeah, something like that is coming, whether it's good or bad. I would say that it's likely coming soon, as we are inside of this major pivot. Yep. I would totally agree with that. So, well, let's just go through or dive into Bitcoin a little bit here because as someone who owns Bitcoin, to me, this is the time where I really would like to see Bitcoin kind of go off on its own, kind of graduate here. I think there's a really good chance of that happening. So if we were just to take a look at Bitcoin from a quarterly perspective, again, a lot of the analysis we're going to do here is much more broad lens, because to me, if you don't have that small higher time frame bias or analysis, then it's going to be really difficult to come to smaller time frame conclusions. I just think automatically it's much more difficult. So from Bitcoin's perspective, if you take a look at the quarterly here, we actually got into that discounted quarterly imbalance and we have begun to leave it, right? And we're currently well above that discounted imbalance, which was at about $76,000, okay? And here's just the reaction off of the last imbalance that we have seen, okay? And again, price has moved higher. Now, as you continue on, again, I think everything looks okay from a higher time frame perspective. We really don't have too many levels in the way, right? And believe it or not, Bitcoin actually created a weekly bullish imbalance last week. That would also coincide with a bullish breaker. Low, high, lower low, break up and through, ultimately, anticipating the high of that previous sequence to act as a support level. And of course, discount inside of this most recent run. We are talking, potentially a deeper little retracement, but nothing beyond those lows. And from there, I really expect price to, start to chase those all-time highs a little bit. So that's really, while there is some indecision on my end from a Nasdaq SPY, Dow perspective, I think Bitcoin will fare much better. And then if you just take a look left, you're going to notice that we really don't have any bearish imbalances from a weekly, monthly, or quarterly perspective to kind of slow price down. I think there might be two daily left if I'm not mistaken. So let's just see. Uh, yeah, there's one right here. Okay, so maybe just one left, and the one that we just recently created following that sweep of buy side right here. Okay. Um, there's your breaker. So your daily range looks something like this, very similar. Kind of overlaps with that weekly. So yeah, I mean, I would really like to see, even if we were to see some sort of larger scale retracement on, say, NASDAQ SPY, I would really prefer Bitcoin to kind of begin to do its own thing, because for a long time there, NASDAQ and Bitcoin had really been running together in a sense. So would really like to see Bitcoin outperform moving forward here. And there are a lot of good crypto setups. So I will say that. Yeah, decoupling would be cool. Yep. Bitcoin looks ready to rock it. Yeah, that's the only question I have. Is it an immediate move higher, or are we going to see that weekly breaker, which, is still a couple thousand down? So LR, yep. So no imbalances other than that one daily imbalance here. So a low resistance liquidity run could very well be in the cars. That this would be, to me, you have a daily breaker here, and also a previous bearish imbalance flipped bullish. You could see the reaction to that bearish imbalance here prior to snagging that buy side. So yeah, I really would like to see Bitcoin start to separate a little bit. Now, from the perspective of small cap summer, we'll do that in a second, but I got to do this Rumble thing real quick. Hold on. Okay, this sponsorship is from Rumble, one that is incredibly important to the survival of the company. When Rumble first started in 2023, they built the platform for the small creator. They didn't censor or have biases. They were fair and treated all creators equally. No one thought platforms would censor political conversations or censor opinions on COVID, but they did. Facebook admitted they fell to pressure from the Biden and Harris administration. Rumble did not. They held the line, and they are attacked daily for giving us a voice to speak to you. They are attacked in corporate media, they are attacked by governments like France, and they are attacked from brand advertisers who refuse to work with them. Corporate America is fighting to remove speech. Rumble is fighting to keep it. Rumble won't survive with brand advertisers. They don't get much of it. So watching our show on Rumble is the most they can ask from you. And if you believe in this fight, and if you have the means, one major way you can help Rumble survive is by joining Rumble Premium. Join the community that believes in the First Amendment and believes in our human right to free speech. Rumble is offering $10 off with the promo code STUDIO when you purchase an annual subscription. Go to rumble.com/premium and use promo code STUDIO. Like I said, if you have the means and believe in the cause, now is the time to join Rumble Premium. If you don't have the means, we're just happy if you watch us on Rumble. Okay, so now let's proceed. Okay, let's look at what's it called? Russell. Okay, let's look at the Russell here from multiple different perspectives. Okay, so Russell did get back into a bullish imbalance here from a quarterly perspective, which looks nice. We did actually, believe it or not, take out that high on Russell back in October to complete the Mando model from your low, high, discount retracement into a bullish imbalance. This is also a bullish breaker, low, high, lower low, break up and through. High of the sequence would act as a support level, in which it did, and ultimately price ran for those highs. Okay, so one difference that you actually see here on, say, a Russell versus NASDAQ, Dow, ES is that you actually have a chance of forming a quarterly bearish imbalance. The only way that would prevent is if Russell were to make a run up to 21,008. I'm sorry, 20,000 or 2,183. Wow. Okay. And that would actually form that bearish imbalance from a quarterly perspective. Now we have, basically 2 months left. This is a move that can totally be made. I'm not, looking that far out. But then as we go down into, smaller time frames here, let's just see, Russell, okay, so here's your monthly range from your lows up to your high. You did get into a discounted bullish imbalance and thus far have performed pretty well. On your monthly, you've had that previous monthly bearish imbalance for quite some time now. That's up at 2092. So wouldn't be totally shocked if we were to see a move up into that 2092. But that's the mark to beat, really. And the reason I would say, like, look, this looks perfect for Amanda model, low, high, discounted, sweep, liquidity, bullish breaker. Everything lines up great here, except the fact that, believe it or not, on your quarterly, it actually doesn't really look that good. And if I'm not mistaken, let's just see for sure. Low here, 21,079. This is, hold on, whoops. Low 1647. This is so we actually did sweep buy side there. Okay, that's pretty good. Yeah, so yeah, I think Russell actually doesn't look too bad here from a monthly perspective. Let's just see smaller time frame if there's anything sticking out here. Would prefer to form some sort of weekly imbalance. That would be like the same situation as saying NASDAQ. Like we did form one here, but preferably you leave that as a breakaway if you're going to get a continuation move higher. That would be Russell. So not too bad. I bet you there's some pretty good setups from the Russell POV. Yeah. Yeah. May the 4th be with you too there, dude. Yep. Yeah, that's why we're doing the stream here tonight. Wink, wink, nudge, nudge. This anymore. Yeah. Okay, so let's continue here and let's see what else we got. Okay, I kind of want to look at some of the big names inside of these indices. So first and foremost, let's look. Oh wow, we almost have 1,000 on X. That's pretty cool. Okay, yeah, I spread it out across the 3 platforms here. Whatever it is what it is. I haven't been streaming as much. I'm just doing it in the group right now, but okay, so let's see. And there were also a couple questions that I kind of want to get to. Somebody's watching on their screen. 85 inches of perma bear. Oh yeah. But there were also some questions that I wanted to get to, so we can also go down that rabbit hole a little bit too. So let's look at NVIDIA here, and so I can walk through and just put this out in the universe. Realistically, the reason why I do any of these streams is really so that like my thoughts are out there, and like I can't go back in time when I'm right and doctor these. So it's here. Okay, so NVIDIA from a quarterly perspective. Now, this is something that, again, like I said, from that higher time frame, when you look across the board on the indices, if we were to see some sort of higher time frame retracement, which again I think is totally possible, I think something that I would be very much interested in would be a move down into this quarterly imbalance on NVIDIA. Again, let me just say this clearly. This is not something that I'm smashing the table on. This would be, to me, Merry Christmas in, whenever it happens, July or August. I'm saying like that's the way I view this. Is this really shortable? I don't think so. And here's why I say that. At least from a higher time frame perspective, maybe the lower time frames will give us, of course, they give you some juice. But yes, this is a quarterly bearish order block. Gotcha. Okay. Come on over to your monthly. Okay. We've been inside this monthly imbalance now for like a year. How much more juice does it have? I don't know. Could we justify a move from here? Sure. There's no bearish imbalances overhead, so nothing is really necessarily justifying or really telling us that it is necessary for that discount retracement. I'm just telling you from like a long-term investor's perspective, I would personally prefer it down here. If that doesn't happen, so be it. But to me, that's something that, I just need to be protective of and just understand that there's a possibility of this happening. Okay. And with that, me banging the table on long-term bullish trades at this time, I don't think it would be the brightest decision for me to make. And again, that's just because I can totally justify this. Very similarly, you're going to notice this is happening across the board right now, where there are a lot of names that are now approaching weekly bearish imbalances. I had posted something yesterday about, a couple of big names getting into their, quote unquote showtime imbalances. And what I mean by that showtime imbalance, this to me is the biggest pivot you're going to have on the chart. If price ultimately gravitates up towards this level, what happens from here is pretty much going to dictate my trade on this over X amount of time, okay, until one or the other target is going to be hit, okay. So if price ultimately makes its way up through this showtime imbalance, to me, all-time highs are on deck. On the flip side of that, if price gets up into this imbalance and we create a daily imbalance to the downside, odds are I'm going to be looking for that downside move. Very similar to what we had talked about from a NASDAQ perspective as well. If NASDAQ, hold on, where is it? Oh, here. If NASDAQ gets into its weekly showtime imbalance and ultimately rejects from that point with the daily imbalance to the downside, I am going to use that as, structure for the trade to ultimately look for that next low to be taken out. If we're ultimately to make a move, specifically an imbalance through this level, again, all-time highs, I think they're on deck. Okay. So that is the whole idea behind the pivot. Okay. Again, I wish it was so easy. I wish I can come on here and just tell you, we're in the monthly imbalance. I'm short. We're going down, and but I don't think it's fair of me to do that because I think I can paint a pretty clear path in either direction, which ultimately sucks, and not necessarily where I want to be. But that first imbalance is going to be everything. Whatever imbalance forms inside of that monthly imbalance is going to be the deciding factor for me moving forward. That's all. Okay. So that would be NVIDIA. Now I want to do the same exact thing from Tesla's perspective, because again, Tesla kind of lining up with that same overall idea where, okay, can we justify a move from this point? Low to your high, we are in discount. The only thing that is so annoying, this is literally happened across the board, and it's still annoying no matter which way you want to look at it. The fact that we left behind relative equal lows and this quarterly imbalance on Tesla is so annoying. I wish price would have just gotten into here. And, this is kind of a case study we're using inside of the group right now because whatever the low of this Tesla candle was, in that overnight session, we actually got below the 212, which would be necessary to ultimately get into that monthly imbalance or quarterly imbalance. I'm sorry. But it doesn't paint on TradingView. TradingView really does the 4 to 8 hole, that whole dance. So like, what is the impact of Robinhood's extra hour trading and overnight trading and all of that stuff? I mean, that's something that we're currently in the process of kind of back testing ourselves. So again, are we vulnerable to this? There's a possibility for that. So again, monthly imbalance formed here. Did we get down into discount? Yes, we did. Did we get down into an imbalance? Yes, we did. Did we leave relative equal lows? Unfortunately, yes, we did. So if price gets ultimately into this monthly imbalance and we begin to roll over with smaller time frame imbalances, that is something I'm ultimately going to be looking to target. The same would apply from the weekly perspective, because I think Tesla still has quite some room before discount of that range. And it does. Yep. So from your highs back in January down to your lows of April, this week could be the first week you actually paint a bullish imbalance here, okay, on a weekly perspective. And if that were to occur, I would fully anticipate price making its way towards 327 to get into discount of this bearish range and get into that discounted imbalance, okay? So that's where, again, pivot. All the stars start to align, indices in their monthly imbalances, a lot of these big names inside discount of their bearish weekly price runs. That's really the time to make a move. And again, whichever move comes from that showtime imbalance, that is really, going to be my directional bias for the rest of the year, it seems, right? So that's Tesla, right? Same kind of category as NVIDIA. Then you go from Amazon, right? Amazon's perspective, you got a deep discount into bullish imbalances. Excellent. Okay. If I were to just map out that most recent weekly price run, we are approaching 50% of that run, which is at 201.95. Okay. Still some room, but what's going to happen inside of that discount bearish imbalance inside a weekly price run? Okay. Showtime, right? That is the pivot. That is what's ultimately going to give me my answers moving forward. So I guess, in short, between everything that I've said thus far, the whole idea being, yes, we are in a monthly imbalance. There is going to be a move that I think dictates the movement for the rest of the year occurring here relatively soon, as almost everything is starting to line up inside of those, pivot imbalances, if you will. And odds are you're probably going to get a chance to trade it, right? Just because you're not using that monthly framework, that 1,100 point risk doesn't necessarily mean that it's not going to offer you an imbalance to the downside or up and then retrace into it at some point to give you the chance to actually capitalize on it. So in short, across the board, I think more information would probably be really helpful. And I think we're going to get it really soon. You know, you go into like an Apple, for example. Sure, bullish imbalance here from the monthly. We bounce very nicely. We actually gap down to start this month. That is a bearish volume imbalance. Okay. Is that going to offer us an idea that ultimately downside continuation is going to happen? Discount of this range isn't until 156. Is that something that could potentially be on the board? Well, you got relative equal lows here, right? I'm not going to be the one to say that this is, I need to completely rule that out, right? That is something that could absolutely happen. 2 monthly volume imbalances overhead as well. So, these are all, I guess, possibilities and probabilities. My whole thing is now, what is the reaction inside of that higher time frame imbalance? That to me is going to give us that compass moving forward, right? And I sound like I'm on repeat, but I want you guys to kind of understand that me identifying a bearish imbalance from a monthly perspective was not a bias. It was a fact. It was something that actually happened, right? And of course, we can use historical data all we want to try and help us make decisions in the now. But I think there are a lot of variables this time around that I don't like. And notice how I didn't say one thing about Trump's tariffs, potential war in the Middle East. Like I said, none of that. And I'm still looking from a chart perspective, right? You hear something regarding tariffs or news and market makes a move in either direction, that's going to be used as the justification. But I'm here telling you before it happens, this imbalance is going to dictate what happens essentially throughout the rest of the year, knowing that this is from a monthly perspective. And if we were to go down, look at the last time we had a bear market, that thing took 8 months, right? If we go up, it's a very similar situation to, say, COVID, where it was short and sweet into discount and it's gone for that, next move higher. So, I think everybody obviously wants the answers, but I don't think it's cut and dry. I don't think it's this is exactly what is going to happen. So, if either direction is equally likely, I mean, even if you were, let's just say all of what we talked about right now is a smaller time frame setup. If you can kind of justify and put together a thesis in either direction, the way that I kind of did here, is that something you really want to trade? Probably not, right? Probably not. Why not allow for price to kind of dictate, okay, look at the reaction out of this bearish level. Okay. To me, there's your green light. Look at the reaction or the lack of reaction to this bearish level. We just created a bullish imbalance through it. What's the draw on liquidity, right? For creating and respecting bullish levels, you would anticipate the draw on liquidity being higher. If you are creating and respecting bearish levels, the expectation ultimately is that price is going to gravitate lower. And because we are really inside of that bearish imbalance, that's to me, that's the answer to the test. Yeah, those last chance imbalances got me drooling. Yeah, you're right about that, man. I mean, like I said, to me, it's like, it's almost as if you're waiting for, that volatility event to kick in, right? We're in a spot where it's like, all right, make or break. Something's going to happen here that is going to be extremely helpful for us moving forward. But yeah, I just definitely don't want you all to get it twisted. I'm definitely not bearish. I'm definitely not bullish. I'm pretty indifferent, and I'm not looking to make higher time frame calls by any means. You're not going to see me brag about this if this rejects and goes back down into discount. That's not one of the ones I'll brag about. I'll brag about the other ones, but definitely not from this perspective, because I do not think this is easy. So if you're taking anything away from this, I think, the idea that this is not an easy read. And again, I'm just being honest about it. Let's see what else. No trade. Totally. I keep telling myself that buying Tesla on 300 is a gift. If we take the relative equal lows, I'll buy more. If not, I'll be thankful. I bought under 300. Yes. So, I mean, the way I look at it, especially when I'm looking, from a long-term perspective, like buying shares on something and, kind of, I don't want to say forgetting about it, but allowing it to kind of take care of business over a long period of time. Anything in discount is something that I'd be interested in, because ultimately, if my idea is correct and we go to where I believe it's going to go over the long haul, me adding anything in discount is, a beautiful thing. And, for anybody who's newer here or, not as familiar with the whole premium versus discount, um, you know, when you look at it from a bullish perspective, right? If you have a bullish price run, anything below 50% or equilibrium is going to be technically discounted prices. Anything above that 50% is going to be your premium of that range. And, if you go to the store and you have the option to get something on sale or not on sale, what are you going to, the likelihood of you buying the thing on sale is probably higher, right? So that would be the same way that I kind of look at price. Any signals now? No. Learn how to trade. Tesla has just enough room to entice both bears and bulls to potentially hang themselves. Yeah, again, from the higher time frame, what is your clear path right now? I don't think there is one. So, yeah, let's see what else. Oh, I wanted to go through the questions. So I'm going to go through the questions and then we'll wrap here. Tomorrow night we'll do back-to-back live calls in the group, and then Tuesday, Wednesday, Thursday we'll be back for live trading, and then I don't know, maybe Thursday night we'll do something, we'll see. But there were a bunch of questions here today, so I wanted to just get these out. I would have done it in like a quick video form if I knew I wasn't streaming, but I knew I was going to be on here, so I could just direct you here. But so I think a pretty good question here was, suppose that we have our bullish range, then we have a retracement, but not quite to 50% of the range. Since it didn't reach 50% or more, should we continue the same range until there is a 50% discount? Or should we start our new range in the point it reversed in? No. So ultimately what you're looking to do is, if there's no 50%, there's no established range. That's the way I look at it, right? Because you can't establish what is, discounted versus what is, premium or overpaying if you haven't seen equilibrium of that range just yet, right? So you might say, like, for example, oh, well, look, dude, we ran this, we didn't quite get down into discount. Well, at the same time, nothing here is really justifying any bit of discount, right? So you might be familiar with the Mando model, but the model that I've been showing everybody this year is that OddNAM, which is essentially the inverse or looking to play to get us down into discount. And you can't get that OddNAM model unless you have a bearish imbalance to the downside, right? And we didn't have that here. So nothing was suggesting 50%. And as you could see, price ultimately gets into an imbalance, nothing holding it back, and makes the next leg higher. Again, very similarly here. Look, no bearish imbalance ultimately gets into a bullish imbalance and you get your expansion, right? So until that bearish imbalance forms here, nothing is suggesting 50% is necessary. There's no range being established, okay? So once that imbalance forms, what's the expectation? Discount. There it is. Okay. So there's your 50% and, imbalances that would coincide that altogether. So that's just the whole idea behind allowing a range to set itself. And how does it set itself? A bullish range sets itself with a bearish imbalance and vice versa. A bearish range would set the range with a bullish imbalance. And we can ultimately take that up to 50% as a trading opportunity or take it down to 50% as a trading opportunity. Just, the other end of the spectrum here, because ultimately on the Mando model, you're looking for discounted bullish imbalance or bearish imbalances, right? It goes either way. But as you wait for those, is it tradable to get you to that point? And I think it is. Yes, you can use that imbalance. So hopefully that answers that question. So let's just see as we continue on. Oh, okay. So he had a follow-up to this. So in this example from Wednesday, price came into the bullish imbalance. Since it's not 50% retracement from the start of the range, could only be a fair value gap, good confluence to start to look for the trade in smaller time frames. Yes. What I understand is if it's in discount would have been 50% or more. The confluence to activate the trade is very clear because in this case, it would discount retracement of 50%. If you start the range in the level I highlighted in the yellow circle, I don't know if I'm explaining myself good. I'm not English native speaker. Okay. Yeah. It's no problem. I get what you're saying here, but you would be absolutely correct, right? So, ultimately we are getting into those imbalances and we are making moves out of them to expand the range, right? We're just expanding the range. Like Friday, to me, not all that tradable. And it was due to the fact that we were essentially just expanding our range. We hadn't established one yet. Okay. I'm having trouble understanding when to use 50% as the bottom of the chart for the next run versus using the low that takes out the previous high. If it hasn't retraced to 50% of the time frame yet. So that really doesn't make too much sense. Would I start here? Oh, so you're looking from where you would actually start the range. Yeah. So think about it, right? Everybody wants to talk about trend is your friend, blah, blah, blah. They don't tell you how to actually identify the trend, right? So here's how you can identify a trend. Zoom out, look left, look right. Okay. Have we taken out a swing high or swing low? Okay. For example, I would prefer to use, something like this. I don't know what example you guys want to use. Let's use Tesla. Okay, that's fine. Right. So if we look at Tesla, right, and we ask ourselves the question like, okay, like inside of this run, for example, right, did we take out a lower high, right? Okay, well, we took out a high here. By taking out this high, we're actually shifting the state of delivery, right? We're going from a bearish trend into what is a bullish trend. So until we took out a high, right, notice how none of these took out any highs in the process, right? When you take out your first high, you are shifting market structure bullish, okay? Now, Mando model time. We'll have some fun with this one. Low, high, discount retracement into a bullish imbalance. There's your run for highs. Mando model complete. From your lows up to your highs, discount retracement into a bullish imbalance. Run on highs. Mando model complete. From your lows up to your highs, here's your discount retracement into a bullish imbalance. There's your run for highs. Okay. And so on. Right now, we are deeply, deeply discounted inside what was a massive range, massive runner. Okay. Lows, whoops, up to highs. Okay. And you might be saying, wow, that works really good. Is this just hindsight? Is hindsight just like, is it because listen, trust me, it's super easy to do this after the fact. I promise, but I'll show you it in real time. So here's Tesla because I got the receipts. Okay. June 19th, 2024. So let's just go June 19th, 2024. It was inside of this weekly candle right here. Okay. You could see I said Tesla 414. Tesla was trading at 178. Okay. Low key, this is probably the best trade I've ever had. So just to be fair, but yeah, 414. There it is, 414.50. And then I kind of reiterated it here with a tweet in October when price was, let's say like 220, 230, 414. And there it was. So, I got a bunch of these actually. So here, NVIDIA, daily bullish breaker form, blah, blah, blah. Mando model completes at 974. This is without the switch, but the split, I should say, but low, high, discount, bullish imbalance. There's your run for highs, Mando model complete. And then obviously again, low, whoops, there, low up to your high, discount, bullish imbalance, run for highs, Mando model complete. And I got a bunch, like I said, I got a bunch, but this is there's another one, 164. This was at like $100. So yeah, there's quite a few, but it's not all hindsight. That's the main takeaway, right? Hindsight is easy. Okay, so that is just the whole idea of mapping a range and everything like that. So let's see, were there any more questions? This is also a good question. Okay. Because this happened quite a bit last week, believe it or not. Okay. So the question was, when playing the odd NAM, again, this is one of the two models that we really key in and focus on, right, in the group. When playing the odd NAM, when should you expect to see a retracement into the imbalance for a run to 50% rather than the imbalance forms and price continues to go up, right? So the idea here would be, right, ultimately for odd NAM to be something that we would even consider, we need that imbalance to form. is the imbalance forming good enough, or do we need to see price get into that imbalance? That's really the way that I took this question, and I think it's a good one, right? And the one thing you're going to note, and I reviewed this and I posted it on both Twitter and in the private YouTube. If you guys want to go back and check, but I did like a trade review of the trades I took the other day, and the 5-minute imbalance was completely left open, right? And it's like, oh man, it didn't give me an opportunity to get that 5-minute imbalance. That's a total pain in the ass, right? And I would say yes, I would agree. Was it here? Oh, this is 15, but I'll show it to you from the 5 because this is pretty important to me. Okay, so here it is. From a 5-minute perspective, you notice we form that imbalance, and look what happens. See you later. But the 5-minute didn't give you that opportunity necessarily, right? And, there's numerous ways, I guess, you can kind of justify, like, why didn't it give you that 5-minute tap? And, from this perspective, we made a breaker, and when we make breakers, the breaker is good enough. You don't necessarily need to get into the 5-minute imbalance. Low, high, lower low, break up and through, wick onto your breaker right here, and then it takes off, right? But when that happens, what I do a lot of the time is I actually go to even smaller time frames. So let's say I'm looking at an hourly, I go down into, 15, 5 to find it. If it happens on the 5, really I'm starting I kind of want to look from a, even 1 or 3 minute perspective to kind of give me, the I guess basis for that idea, or some sort of an opportunity, or else, technically it's really just not going to give me anything. And then there it would have been your bullish imbalance right here, and into your breaker, and that's your 5-minute imbalance. So, that's the thing, right? And the beauty of that is as you drop down in time frame, oftentimes the risks associated with that trade go down dramatically, right? So, what's going to be bigger, an hourly imbalance or a 1 minute, 5-minute imbalance? Odds are it's probably going to be the hourly. So if you were just trading it from an hourly perspective, the risk associated with that trade is probably going to be much more, versus the smaller time frame. But on the flip side of that, your higher time frame probably has a much better success rate of actually taking care of business. So, I would prefer to form on a higher time frame and then use the lower to kind of operate inside of that. To me, that makes the most sense. But so yeah, that would be the idea behind odd nam, right? Because at the end of the day, as long as we have the draw correct, we have the idea as to where price is going to go from this point. There's numerous different ways that you could really attack that and try and be as precise as possible with it moving forward. So, that is those are the questions from in there. So, I think that's all I got for now. So, today's the last day. I'm doing the 40% off yearly / lifetime. There was a lot of newer people. So anybody who's new listening to this, welcome, and just check out the beginner's guide. I think that's really important to kind of get a head start into a lot of these concepts. Now, of course, we do review even the most basic of concepts, kind of on a day-to-day basis. But, if you want your progress to kind of, speed up a little bit, taking care of those videos definitely will help. So, yeah, that's all I got for tonight. So, hopefully this was insightful. And again, thanks always to supporting the page. We grew a lot over the last week and a week or so. So it's good. I'm glad. Clearly, people are having success learning the concepts that we discuss, and we're only going to get better from here. And while we're fairly close to a lot of these geniuses, making their grand exit from Twitter, like half of my following list, they're all gone. They don't stay, but I will be here forever. So you're stuck with me. So anyways, I will talk to everybody tomorrow. Good luck. If you have any questions, feel free to reach out. I'm not on X, though. I don't really check the X DMs, but I will catch everybody next time. And where's this outro video? Okay, good luck. See ya.